Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The latest news from China is that China's government reportedly considering suspending its 125% tariff on some U.S. imports like medical equipment and industrial chemicals like ethane. So is this the first step towards actually coming up with some kind of deal? Sean Donnan is Bloomberg News senior economics writer, joins us now. Sean, is it?
I think what we're seeing here is some of the same things that we've seen from the Trump administration so far, and that is giving exceptions to the tariffs on imports for kind of key things that the economy needs, right? These are key inputs that Chinese people or Chinese companies rely on from overseas. I see this not so much as an accommodation aimed at Trump or at the U.S. tariffs or at setting the stage for negotiations, more at kind of shoring up the domestic constituencies and kind of getting ready potentially for a more protracted trade war.
Sean, is this the type of news cycle we should get accustomed to, which is country by country by country, bilateral, back and forth press conferences, tweets about what we might do, what we may not do? Is that how we're going to go? Or is there going to be something more, I don't know, unified, pronounced?
Look, I think for now we are really, in this kind of land of trying to figure out what's coming down the pike, right? And that is in terms of the impact of tariffs. And you see that in kind of corporate earnings, people talking about a future impact, right? As opposed to what has happened in quarters past. It's all about the outlook ahead. And I think the same applies to the economy now. We'll get next week the first take on U.S. GDP numbers. That'll give us some indication of what happened in the first quarter. But that really takes us, through the end of March, and that's before these worst tariffs or the higher tariffs that President Trump unveiled on April 2nd come into play, right? And we're only going to see those effects filtering through the economy in the months to come. So in the meantime, we get lots of kind of dueling narratives, if you will, on what's coming up and whether we're getting closer to a deal or not.
Here's a really basic question for you. Are China and U.S. administrators actually talking to each other about trade?
Well, look, that's the huge question, and we don't know the answer to that, right? Because it depends on which side you believe. The U.S. says they're talking, the Chinese say they're not. And meanwhile, we have these tariffs that remain in place with a few exceptions. We've also, heard from the president again this morning that, maybe a deal with Japan is close. We've heard more cautious noises out of the Japanese side. We had heard that perhaps a deal with India was close this week. Well, what we got instead was an announcement of a kind of framework for talks, right? For negotiations. I thought the most instructive comment of the week came from Scott Bessent, the Treasury Secretary at this closed-door J.P. Morgan meeting on Monday, which really caused the markets to pop when he started talking about the need for de-escalation. But the other thing he said there was that it's going to be a long slog, and that's the word that he used, to a deal. It could take 2 to 3 years to reach a deal between the U.S. and China.
All right, Sean, let's say I'm China or Japan or France or whomever, and I want to strike a deal. Who do I call? Do I call Howard Lutnick, Secretary of Commerce? Do I call Mr. Bessent? Do I call the president? Who do I call?
Look, I think at this point you try to call everyone, but maybe the answer is you don't call anyone because you just wait. And I think we've seen this week really how the markets are affecting the decision making in Washington and inside the Trump administration, and how the U.S. in some ways may be negotiating with itself before it really sits down and negotiates with the rest of the world.
All right. Thanks so much, Sean. We really appreciate it. Sean Donnan. He covers trade and economics right here on Bloomberg Television.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
University of Michigan sentiment data came out better than expected. Just looking at the headline number, 52.2 versus 50.5 was the consensus. Inflation, one-year inflation, which ticked up significantly last period, came in a little bit better than expected, 6.5% versus the expectation of 6.8%. So let's break all this down with Joanne Hsu, Surveys of Consumers Director at the University of Michigan. Joanne, talk to us about this data here we got this morning.
Well, things came in a little bit better than what we might have expected based on what we saw 2 weeks ago. It's still a pretty negative read altogether. Consumers are not feeling confident at all about labor markets, about business conditions, or their personal finances. And that's something that definitely does not bode well for their spending going forward.
Why, though? Like, what are the biggest reasons for that? And even though it's still a not great reading, it's still a little bit better. So what accounts for that?
The number one thing on people's minds when it comes to the economy is tariffs. So consumers did see a little bit of relief after April 9th when a lot of the reciprocal tariff announcements were paused temporarily. And we saw inflation expectations come down just a touch after that happened. But overall, consumers are still expecting inflation to come surging back. They're expecting business conditions to weaken. And most critically, they have downgraded their own income growth. Again, this is in large part because of the volatility in tariff policy. Consumers seem pretty convinced they're going to be high, but on top of that, they see policy going left and right, and they're aware that businesses will struggle to plan, and so will consumers.
Do we have any sense as to spending at the consumer level, Joanne?
Consumers are telling us that they're really bracing for a downturn in the economy, and buying conditions for big ticket items are really poor. It's sort of a combination, though, of people who believe that if you were to buy something literally right now, you might be able to avoid the price hike that comes from tariffs, along with people who realize that it takes more than one day to make these big ticket purchases, and they're really concerned it's too late.
On the flip side, before I let you go, the inflation expectation numbers, though, came down. I appreciate they're still elevated, but at least with the 5 to 10 year, that stayed steady. How sticky do you think that inflation worry is?
I think as long as tariff policy remains unresolved, things will still be hairy with inflation expectations. Consumers are attuned and are highly aware of the major developments in tariff policy. They're not necessarily watching day by day, but the April 2nd announcement, the April 9th announcement, those were things that we clearly saw people reacting to in the data.
All right, Joanne, thanks so much. We really appreciate the instant breakdown, that instant analysis on the data. Joanne Hsu joining us, University of Michigan Surveys of Consumers Director.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Staying on big tech, take a look at Google. That stock is up by about 2.5% off the highs of the overall trading session if we count pre-market trading. But the net here is that first quarter results beat expectations. You had continued strength in that search advertising business. Plus YouTube also continued to crush it despite estimates a teeny tiny bit light there. Dan Ives, Global Head of Technology Research at Wedbush Securities, joins us now. Dan, broad stroke, rate the quarter for Alphabet.
I'd rate it an A-. I mean, especially in terms of CapEx, what you saw in terms of cloud spend, I think advertising, relative to the uncertainty. I mean, this was, I think, a robust quarter across the board. There's still obviously antitrust and concerns and obviously tariff uncertainty, but I think it's actually a good sort of sign going into the rest of big tech next week.
Dan, how do you think about the threat to Google's core search business from AI?
No, look, there's definitely a threat, and ironically, that threat is actually a support for almost an anti-monopoly, right, in terms of some of the antitrust. But to me, it's a threat, but look at the advertising. I mean, the reality is, like, I'm not saying it's not a long-term headwind, but they're also going to benefit when it comes to AI significantly on the cloud. Mm-hmm. And Google, as we've seen again and again, they're going to be able to pivot. And I just don't view it as a massive threat like maybe some others would view it.
Well, let's go to the cloud then. So it's AWS, Microsoft, and then Google. How quickly is Google catching up?
They're narrowing the gap. I mean, look, Microsoft, it's their backyard, right, when it comes to core enterprise, core cloud. So Microsoft continues to have just I think of just an ironclad grip. You've seen success from AWS, but look, Google, what Korean's done there, it's been a massive success story in terms of as it's played out. And I think that's important because that to me is going to be a big part when you think of some of the parts. I mean, that's how you get an increment. We have $200 price target, like $30, $40 upside. I think more and more as the cloud story plays out.
Hey, Dan, we saw that President Trump has kind of made some comments about towards some of the European regulators about maybe stepping back some of the regulation of artificial intelligence, AI. How important is that?
Well, Paul, I mean, and we've talked about it before, right? I think it's all part of this broader negotiation because big tech has had a bullseye on their back from Brussels and EU for years, right? I mean, fines for big tech are almost like getting a cup of coffee when it comes to what's happened in Europe. But when it comes to AI, look, I mean, this is a hard line stance. And I think it's actually all part of even the broader tariff negotiations in terms of them softening the stance. And that's something big tech has obviously been a huge advocate for because they essentially Europe's like almost off touch. Like you can't even go into that market right now.
Fair enough. Before we go to next week and what we're going to expect, let's just kiss on Tesla here. So your note earlier in the week before earnings, the code red note caused a flurry in selling in the stock. Do you still feel like it's a code red after earnings, or have you changed your color?
No, I mean, I think it was a code red because Musk had to make the choice. Clock struck midnight, Doge or Tesla. He chose Tesla. And I believe, despite I'll say 1-2 days a week, it's the beginning of the end for Musk at Doge, I think in the Trump White House, at such an important time for Tesla. In terms of autonomous, in terms of the lower cost vehicle, in terms of robotics, Tesla needs its leader back. And that's why I think it's going to be viewed historically as probably the most important conference call Musk has ever had.
Talk to us about Apple. We're going to hear from them in just a few days here, Dan.
That's going to be so fun.
That is. What's the call on Apple? What are you going to be looking for? What's the street looking for?
Look, I think the quarter itself almost takes a back seat because, that's everyone's focused on just given the uncertainty, like how is Apple going to navigate this? And to some extent, like I'd be surprised if they actually gave guidance, or maybe they'd give guidance with a huge caveat, because the reality is, especially when it comes to like the 232 tariffs, in terms of that needing to come out, they're basically going through logistics nightmare in terms of chaos. The demand story, the longer term demand story, the reason to own Apple, that doesn't change. But in terms of I think many on the street, they're basically going to toss out the June quarter. I mean, the focus is basically June's the mulligan.
Yeah.
And now you look to see what happens ultimately coming out of the White House from a negotiation perspective.
So 2 questions on that. One, will we hear about shifting supply chains quickly? There was an article out today about getting a lot of sourcing from India. And 2, do we get any insight potentially into how much a new iPhone with tariffs will cost?
No, they're going to, this is going to be, they're going to keep that very, very close. And they're not going to discuss because the reality right now, they got to be careful, right? Because they are in the eye of the storm, just like Jensen and NVIDIA. And that's why they're ultimately beholden to what happens with negotiations. But it's why it's so important. And we've talked about, despite all the articles and the reality is it would take them years to even move 10% of the supply chain. So that's the reality that Cook and Apple are seeing. But that's why this call is going to be important to kind of lay out the scenarios, at least how they're going through it.
In your broader world of technology, Dan, are there any areas that are safer havens to be at given all this global uncertainty?
Yeah, but we talked about it, in note yes, like I think like the safety blanket area is software. And that's right, the hyperscalers, I think you saw from Google, I think that I say the same thing from Microsoft. You look at names like Oracle, I think IBM, despite that sell-off, is a safe haven. Then names like Palantir, like AI-driven names, that's some of the high priority. And I tell you, probably for the first time in 3 weeks, some positive smart checks just showing like rock solid CapEx not moving. No one wants to lose their place in line.
Okay, but to the solid CapEx, is it shifting within that? So you don't want to lose your place in line. I get that. But at the margin, are we seeing any money flow from, say, enterprise to AI or out of AI into enterprise or some shifting on the margin there?
Yeah, I think you are. I mean, I think from a priority perspective, like within IT departments, there's so much kind of freezing uncertainty. If you're AI, you're with the cool kids. If you're not, it's tough to get things approved. So I think that's, if you're on an AI focused project, that's a lot of the stuff that's getting greenlit despite so much uncertainty.
Dan, thank you so much. Appreciate that. As always, Dan Ives. Oh, real quick, Dan. Good first round for your Penn State football players.
I'm wearing look, Abdul Carter. I think it's going to change the Giants along with Dart. You got two Penn Staters, right? Top 15. A huge day for Giants and Penn Staters.
Yep, absolutely. So we appreciate that, Dan. Huge Penn State fan, a Penn State grad there. So I want to give the heads up again. Two Penn State football players taken in the first round of the draft. One to my New York Giants. So that's a good thing. Dan Ives, Global Head of Technology Research, Wedbush Securities. Let's be honest, he peaked at Penn State, but he's kind of doing the best he can.
He's doing all right. He's doing okay.
Right. He's doing okay.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's get to another stock on the move, and that's Apple. The reporting is that potentially it's going to move some iPhone manufacturing to India. Anurag Rana, Bloomberg Intelligence, senior technology analyst, joins us now. How much stock should I put in this headline, Anurag?
I mean, it is a very big deal for them to double the production of Apple in India. This is mostly assembly, but, frankly speaking, it's gone from nowhere to just about 20% by the end of this year. So, I mean, last year, it's just a big number, frankly, and it was surprising to us at this point.
I'll tell you what's surprising to me is you actually shaved. You found your razor, and he shaved off his beard. So I am all in favor of that.
Yeah, I was like, who's that guy?
Yeah. So, Anurag, so in reality, though, how do you and how does the street think about Apple's ability to, reduce to some degree its kind of reliance on China as a end market, as a source in its supply chain? How does the street get comfortable with that?
See, on the other hand, I do want them to stay in China because that is their biggest growth market. That's the market where they have the most, phones out there right now. I don't think people understand that they have more iPhones as an install base in China than they have anywhere else in the world.
Really?
And yet their market share in that area is only 20%. So for me, that's a very important end market. Decoupling is not going to help Apple's growth story.
But does it help? Okay, it doesn't help its growth story, but does it help it manage tariff and margin pressures over the next, say, few decades, though?
Yes, it does. But at the same time, Apple is a company where it has navigated the Chinese politics very well, probably better than anybody else out there. Now, if they decide to say, okay, we're going to take a lot of this capacity and move it outside, I do not know what kind of backlash there's going to be by the Chinese government or the Chinese consumer.
Right.
Now, we'll find out what that happens. But, for me, it's an important piece of the growth story. Roughly 17 to 20% of their revenue comes from China. And as I said, it's a massively underpenetrated market for them. The U.S. market, fairly saturated, frankly.
All right. So, Anurag, in a world that is kind of reeling from trade uncertainty, global trade uncertainty emanating from all the tariff talk, is there a place in technology to hide?
That's a very good question. When you look at the direct impact, Apple is the one with the highest direct impact. There are other companies that really have no major exposure to China. I'm going to bring up Microsoft as one of those names. And this is where I think they will show, I think, the street over the next 1 to 2 years that their growth rate will continue irrespective of what's happening to the macro because of all the investments that they are putting in Gen AI. I think that story is still not fully understood by the street just because all the investments they're making, people are only considering CapEx. But I think they're going to go ahead and take more market share in cloud just because of all these investments.
Before I let you go, we got Google this week. We got Texas Instruments. Next week, we do get Apple. What themes are emerging for you in some of these tech earnings?
I think the capital expenditure and what's going to happen in that is going to be one important thing. The second thing is, I think at least for now, things are not as bad as we expected them to be. When you look at results from SAP, ServiceNow, things are not that bad. But having said that, I think we have not seen the biggest brunt of the slowdown coming in. There probably more is a second half story. When Microsoft reports, the most important thing for us is what's going to happen to their capital expenditures. And I think that's the theme to follow.
All right, Anurag Rana, thank you so much. We appreciate that. Anurag Rana, he does a technology thing for Bloomberg Intelligence. He's based out there in Chicago, which is, most people don't know, is a burgeoning tech hub, and Anurag's blazing the trail out there in Chicago, certainly. So anyway, we're going to hear from Apple next week. That's going to be fascinating because you think about it, of all the companies out there that have exposure one way or the other to China, the one that jumps out at me is always Apple, because 20% of their revenue comes from Apple, and as Anurag noted, it is the growth market or the leading growth market for Apple, or one of them, and it's just an integral part of their supply chain.
Yeah.
I mean, you think China and making stuff, you think the iPhone and Foxconn and all that kind of stuff.
Well, but also what Anurag is saying, it's not just about making it, it's about selling it.
Yep.
And that is a huge question mark there as well.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.